Hi, today is Monday the 6th of September, beginning of September, and this is a late recording on account of this public holiday. So you are seeing here the 4-hour chart on SPX, and last week was pretty much lackluster. We thought that NFP would be the trigger of something. It did cause the market to go up and then down, but basically still in the same range, as I've said on several occasions on Slack. The high volume level is still around 45.30, and that is also the strong resistance here. The resistance is trying to move higher, but it's still around here. I think it's a bit of a blip, and I wouldn't take it too seriously. That being said, we can also look at this test of a resistance for support to go higher. That being said, the volumes today are insignificant, so let's wait for tomorrow. We have here on this turquoise line the daily channel. So basically we bounced off there and we may actually go a little higher. And if the market moves up and this resistance moves up as well, this is likely to go here. Probably not as high as what this one is calculating. I would assume it should go around here, around 45.70. The market is definitely ripe for a correction. But now, if a very disappointing NFP does not have any effect, we may have to wait until FOMC and sometime in October, the third quarter earnings, to get some clarity. As far as we can see, we can only go with a flow. And we will see in the other video about trades how we manage this market that is a little bit crazy for market neutral. That being said, volatility has bottomed, or seems to have bottomed, around 16. It may bounce again. We see that when it rose very abruptly, it was close to the strong resistance. The second strongest resistance is the pivot, and another attempt that failed. I don't see the market going much slower. It may even try again sometime this month. So let's go back to this before going on to the daily time frame. Let's have a look at the SPX fixed correlation. At the moment it's slightly below long-term average, which is about 75%. So it's a bit of a subpar, suboptimal correlation. There's probably a higher volatility than we could normally expect for a market this high. That doesn't mean that the market cannot go higher and volatility to start deflating. That's a possibility. And another thing is that we see the SPX NDX correlation very, very strong, 94%. At this point, I'm even tempted to look at FANGs, the very few large techs which have now almost reached a strong resistance here. Of course, the level can go up like it did there, but I think this is a good time now for techs to go down and maybe plot a fib here to see where it could actually find support. The reason why I'm looking at FANG is that the breadth of the market is very narrow. It's a tech-driven, but it's actually only a few stocks are really driving the market much higher. Some people say, well, the bear market has already started, because when you look at the spectrum of stocks, they're not going up. Most of them have gone sideways year to date. Okay, so let's now have a look at SPX on a daily basis. Very, very bullish. That's something that I sometimes use is the natural angle of attack. I would say that this ascent is not sustainable. Surprisingly enough, it has been with some profit taking here and there, I would say, for the bulls to get back, fill the dip and take the market higher. So we could have another way of selling in the same band, same channel. To some extent, this is actually good to see the market losing energy here, because it creates an angle of attack that is more sustainable, probably in line with the channel itself. As you can see, if I was to plot a line, it would be around there, which is fairly sustainable. But this one was not sustainable and called for a correction. This one, I don't know. Maybe that was some geopolitical or some exogenous factor that caused this small sell-off, or if only to test the channel lows. But if we want the bull market to continue, it has to go slower. Otherwise, it will test fibs here, or maybe even this one, channel lows, and who knows where it could go if that breaks. It's not in the cards right now, but we have to be cautious as always. So now for tomorrow, Tuesday, and for the shorter week, we see that the resistance level is still the same. We could consider that this is a test for support, which happens quite often when the market is ready to move to a higher level, and the channel highs are actually probably where where the resistance will be if this indicator acknowledges that it is broken. At this time, this is just a trading range, and the resistance level is acting as a mid-range pivot. And I bet that if I was to plot a 30-minute chart, so that's exactly it. This acts as a pivot in a tight range here. So tomorrow we will see where the market goes back to 45.30 or lower, basically continues in the same range. This hesitation may finally embolden the sellers. Generally, of course not always, when there's a high volume bar, it means there's a tug of war on this level. There's a lot of activity, and the market may then go sharply down. And after such a long bull market, in absence of shocking news, that should not happen. And then again, FOMC is only in 2 weeks' time, so the market may just hover in the same range, or keep grinding to here, and it's maybe towards the end of September that we will see that long overdue correction. That is it for now. There will be updates tomorrow on Slack and the rest of the week, and I'm going to record the weekly recap on current trades right now. Okay, thank you for watching, and bye for now.